Well, good morning, everybody. It is the 2nd of August. It is Friday. It is the end of the trading week. And it is also FOMC day. So welcome. It's going to be a news day today, which probably means we may not see too much movement up until the FOMC. Just do me a favour, give me a yes if you can hear me nice and clearly, and you can also see the screen. You should be looking at the Forex Factory calendar. Just while I'm waiting for your responses, this is YouTube Live, and there is typically a delay of between 10 and 15 seconds in you guys getting my responses. What that means is if you do have a question throughout the course of this webinar, it may take me a little bit of time to get around to it. So the purpose of this room is to review the opportunities that meet the rules outlined in the educational material at freeforex.education.co.uk. And there's plenty of yeses coming in there now, so good morning to everybody. So another week of trading done, and if I'm honest, I'm feeling a little disappointed. Yesterday I was up 164 pips for the week. Today I'm down about 35. Down about 35, guys. The pound has, well, it's been tough. Would you agree, guys? It's been very difficult. All the fundamentals that have been flying around with the pound at the moment, we're seeing new lows on a lot of currency pairs that haven't been seen for 2 years, some of them 10 years, like the Aussie Dollar CAD. And the fundamentals have caused this, not the technicals, the fundamentals. And I am a technical trader. While I will take fundamentals into account, so I won't trade things like when Boris gets elected as Prime Minister, or whether there's an election going on around the world, maybe in the US, or there's some major news event. Nevertheless, those have still affected my trading, and I was hoping that this week would get me out of my drawdown. But it hasn't. The pound Aussie lost, the big flag pattern lost, the pound New Zealand lost, both of them almost 100 pip trades. And as I say, yesterday afternoon I was up 164 pips. I had a lovely 128 pipper on the pound yen, 55 pip win on the euro yen. We saw two or three losses throughout the week, and then another winner for 65. And I was thinking, okay, we could be almost back at break even, and the pound. And there's nothing we can do about it. It's a little unusual for me, I'll say, for me to have... well, we had a great month last month, but the way it's looked the last 3 weeks is we had a brilliant week 3 weeks ago. We had a break-even week. Last week was tough, 220 pip losing week. 4 trades that came within a few pips of targets would have left us in profit. This week, yesterday, was up 164, and the pound just demolished our 2 very big flag patterns. And all we can do is suck it up and understand that I am not out of the drawdown, and it's going to be next week now. It's going to be, beginning of August before I can potentially look at digging myself out of this hole. How has your trading gone, guys? How did July go? Did you have a profitable month? Did you not? Let me know. Also, on the Forex Factory calendar, we have some CAD news out. Trade balance at 130 coincides with the dollar FOMC. So I'm not in any trades. I would only hold bigger trades for the FOMC anyway, because we no longer see that whipsaw movement that we used to see. But I'm not in any trades whatsoever. I did have a potential on the pound yen. I think that's been blown out of the water, but I don't think I will be taking any trades today unless there's a sneaky lower time frame trade where I can be in and out before the FOMC. Other than that, guys, any questions? I will run through a few currency pairs. There isn't too much to talk about. There is some decent movements out there on the charts, I would say, but nothing in particular that I'm looking at. So if you do have something, please let me know. Good morning, Arsan. Good morning. Just saying that it's been a tough week. Yesterday, Arsan, I was up 164 pips yesterday afternoon, and then the pound, the pound Aussie, I was up 70 pips. 1 hour later, I was out for minus, I don't know, 70 pips, something like that. So tough, and the pound New Zealand has obviously now stopped me out. So really thought I'd be out of my drawdown yesterday. Well, I was hoping. I can hope. Let's go and take a look at a few currency pairs. There's nothing at market, so I am just going to go over to a couple of trades that we looked at yesterday just to see how they played out. I may as well congratulate the people that took the pound yen trend continuation using the BAT. That thing played out beautifully. My target was a retest of the lows here. What are you guys thinking I was wishing now after seeing the outcome? Are you thinking that I would have been happy taking targets at a retest of the lows, or would I have been happier holding this thing? Because from that point we have seen a 350 pip move. Boy, I wish I'd held it. Morning, Stuart. Just joined us, so just to repeat myself for a third time, yesterday I was up 164 pips in the afternoon, and an hour later I was stopped out on the pound Aussie, which was 70 pips up at the time, and I was stopped out for 70, and then this morning the pound New Zealand has stopped me out, so I'm now down about 35 pips for the week when I was up 174 yesterday afternoon. I thought we was going to dig ourselves out of that drawdown, but the pound again has just been relentless, and there's nothing we can do about it. Only thing we can do is make sure that we don't sabotage, we don't take those lower probability trades. Mickle mackle, with some of these large targets, why not look for target 1 and target 2? I sometimes do. Yep, I sometimes do, and we will take a look at the pound yen that we won the 128 pip trade, and the reason why I did not play for an extension was because this was the very low here of this big wick, and it was quite probable that we were going to see a reaction at that zone, and as we drop down the time frames, and I'll go back to the pattern itself, which was here. Okay, so the entry was a little bit lower, so we just tapped the entry and rolled over. Now, this was my risk on this trade, something like that. Target 1s were a retest of the lows. Target 2s would have only been a retest of this structure level just here. Okay, I'm a structure-based trader, and I take targets at structure, and if we look left, again, this was the very low of this major support level. Look at the reaction we'd seen down to this point. One tap and boom. It was highly probable we were going to see a reaction. And so, because I'm a structure-based trader, I didn't have any confirmation the market was going to go lower. And it was not worth for me personally risking half of this reward just for this small amount for target 2. And again, I had no confirmation the market was going lower. So in hindsight, yes, would I have held it? Absolutely. A 350 pip move instead of the 128 pip we caught. Yeah, absolutely, I would have done. But these are kind of unusual times. You know, we're seeing on a lot of the currency pairs new lows. I did just say at the start, and if you just joined us, you wouldn't have heard, but Aussie Dollar CAD, we're at something like 10 or 11 year lows. The pound is at the lowest it's been for 2 years. We're seeing very big downward moves on the pound as a result of Boris being elected and all the uncertainty to do with Brexit. And these are fundamentals, not technicals. So I can only trade off the technicals. And, you know, yeah, lots and lots of bearish pressure. Apart from the pound Aussie and the pound yen that decided to have a change of heart and decided to go bullishly when we decided to sell the market, which is typical. But that's the reason anyway, just to answer your question. Yep, I would have held it if I'd known it was going lower. But then again, wouldn't we have all? Wouldn't we have all? I will move the pound yen out of the way. And I do want to bring over the Euro New Zealand trade. And again, these charts haven't changed since the last webinar, so it's good that we can go over some of these trades and look at the analysis we looked at originally and see what happened. And just before I delete the Euro New Zealand off, do you guys remember? I hate it when that happens. Just let me reload the chart. There we go. We spoke about this back pattern and about a couple of things about how we could have used it for the continuation higher, but also why this could have been the turning point actually at this 16900 psychological number. Yes, Stuart, that's why then. Let's have a look. Stuart, I have no idea why I wasn't in the pound yen trade. I closed the limit order. That's all I remember. Yeah, to be honest, Stuart, I sent a signal out saying that I closed it for the night time because I don't like to hold limit orders over the night time, especially with all the pound uncertainty. Just let me turn the chat off, guys. There we go. Otherwise, you'll just keep hearing bleep bleep all the time. And then I must have deleted my workings out of, and it wasn't until later on that I saw there was a potential entry short, and I entered in off the 5 range and instantly got a move to the downside. So I couldn't send out another signal. I think about half of the people was in that trade. They left the limit orders on. I know Marcus and Sarah, a couple of other people as well. So Euro New Zealand. Big moves, guys, in the markets. Look at this, 200 pip move, 200 pip move. Let's go and take a look at the Euro New Zealand here. We had the big AB equals CD pattern, which again didn't provide us the entry. Instead, it just hit and rallied. That would have been a beautiful 2-target winner. Hit the 38.2 and the 61.8. And I usually love rallies like this. They give you lots and lots of opportunity to get involved, but in fairness, there just hasn't been a lot to get involved with. Let's drop down to the 240. In actual fact, we spoke about yesterday, this was an indecision candle just here, and yesterday this candle, look at the wick, we were actually trading down here about 10:30 yesterday morning, and we were saying that this could be a nice trend continuation trade if you get that lower close. Of course, you need to wait for the close of the candle because that gives you the confirmation. And that's what happens with candles. Look at any candle. See this one here? At some point, this candle was trading up at this level and it decided to reverse and put in a bearish candle. So it's very important that we wait for confirmation on our trade setups. That confirmation keeps us out of those losing trades and increases our probability. And that was not a lower close. Instead, it turned and boom, another great big rally. So if you were looking for a reason to get short, you're now within the wicks here. Bigger picture, I would still look short, but given the instability of the markets, I'm not too happy to throw my money at the markets just now, if I'm honest. Let's go and take a look at the 240. And there's just virtually no relief here, guys, is there? Look, rally, pullback, rally, pullback, rally. Even if you saw a pullback now to this level, we've already reached our destination up here within the wicks. So I'd only be looking for a small counter trend move if there was something was going to occur here. Let's take a look at the 60. Pete, I got involved via the chat. You meant to post in here, but you posted in the chat. I've done that many times. Many times. Let's go to the 15. You could look for some breakout patterns here. Directional movement like this, guys, this is where we tend to see some form of breakout patterns. This wasn't valid, but you can just keep looking for them. Just keep looking for them in these markets. We've had a few and a few that have stopped us out. So that was the Euro New Zealand. Did anybody get involved, by the way, with the back pattern? And did you play for extensions? Don't know if anybody took that trade. It wasn't one for me, but it obviously played out. We spoke about it, didn't we? Just like we spoke about the dollar CAD. Actually, we may not have spoken about, well, we must have done because I've got the workings out here. The dollar CAD was another trade where you could have used it as the trend continuation. If, however, you had your stop at the 113, you would have been just stopped out. Pretty sure you would have done because I looked at this. Yep, there you go. It just tapped the 113. So if you got involved with this trade and you did use it for the extension, once again, congratulations. Again, it wasn't really one for me. And what I do want to do just on this trade is, some of you have been following me for quite a while now, and whenever I use advanced patterns as the entry, I always have my stop as a minimum at the 113.5. And if you ever look into this, there's a very good reason for it, and that's simply because a lot of the time when we use them for trend continuation, we do come down to the 113. Not all the time, but I found it far more profitable to have it at the 113.5. Because at the end of the day, if you have this much risk and your reward is for the highs, don't you want to make sure that you don't get stopped out by giving it just a little bit more? And I found it was significantly more profitable. So just a little hint for you guys there. Stuart, plus it's NFP today, very risky with all the news. Yeah, absolutely. I'm not in any trades now. I'm flat. I'm looking like I'm going to finish the week minus 35 instead of that 164 I was up yesterday afternoon. Frustrating. But you guys now have seen pretty much 3 weeks of either break even, losing week, or another losing week of about 35 pips, and all as a result of really the pound, all the pound. So it's unlikely I'm going to get involved with any trades today, and as I say, I am flat, but if I was in any trades, I would only keep open the higher time frame trades because of the FOMC. So we'll take a look at the dollar CAD. We will run through a few currency pairs, and again guys, if you do have any questions, please pop them in the chat, and if you want me to look at any currency pairs, we will do that. We will go ahead and do that. Here on the daily then, on the dollar CAD, move lower, pull back, move lower, only just to move low, and then a retracement all the way up to the highs, a move lower, only just another new low, then a double bottom, and then a rotation. So we spoke about this over the past couple of weeks, how this was running out of steam. The double bottom was a rotation, and we could see a pop to the upside. And as we drop down to the 240, we were putting in this kind of stuff, which was really just running out of steam. As you can see here, running out of steam, failing to make new lows. Up here we made a new high, saw a pullback. This was the back pattern that you could have used. Wasn't quite good enough for me, but if you took it, well done. And you just saw another rally, another from this point 100 odd pip move. And I would expect us to go a little higher as well. This would be your first structure level I would pay attention to, and we're currently up testing that. I would like to see that level violated, a pullback, and then an entry reason within this zone just here, and then you can look for wherever you think targets may be, maybe 133.50s, or if you think we can actually come up to retest the highs up here, whatever your projection is. I don't actually have a very good projection on this currency pair as to how high we can go. Here on the 60 may give you another opportunity to get involved with a pattern, X to A to B, B to C, CD completion. On the 15, we are seeing a very nice swing in the market, a directional pull, but then unfortunately no pattern. what we're actually seeing is a swing this way, and then the market kind of adhering to this channel. You can look at this as being a flag pattern. Yeah, the problem is it's a bearish breakout pattern when we're moving bullishly. And I don't think I'm going to be too comfortable selling this. Let me just draw this out again. So let's have it on the closes of the candles. We're going to have it up there. 1, 2, 3, that was your 4th, 5, 6, 7, 8 high test candle. We have broken out of the trend line, but we're trading within this this wick right here. Yeah, this isn't going to be anything for me because we're bullish here, and this is a bearish breakout pattern, so it's not going to be an opportunity for me. We will just take a quick look at the 5 though. Do have a valid back pattern instead, X to A to B, B to C, CD completion, giving you a valid back pattern if you trade advanced patterns. We only use them for trend continuation now. Yeah, any questions on the dollar CAD, guys? Non-farm payroll. That's what it stands for. Arsan. Basically, once a month, America reel off what their figures are, how the country has done for the month, and it includes everything apart from agriculture, so apart from farming. So it includes just basically what they've earned and yeah, basically just how they've done, how the figures stack up for the month, but it includes everything apart from agriculture, so they call it non-farm, and it's the payroll for the month. And do we know that this will affect positively or negatively to the market? Well, what I would say is if I knew that, I would either be buying or selling the market. But what they usually say, and I'll just bring it over, and you can just read it here on the Forex Factory calendar. If you go to here and click on the box, then it says, and it pretty much always says the same thing, it measures the change in the number of employed people during the previous month, excluding the farming community. So actual, the usual effect is actual greater than the forecast is good for currency. Frequency released every month. It just says, what does it say? It usually has something that it says. Okay, well, it's put here, this is a vital economic data released shortly after the month ends. The combination of importance and earliness makes for hefty market impacts. So you can take that with a pinch of salt as to whether we're going to go bullishly or bearishly, but it's got the has the statistics on here usually. May just need to close this to go and see them. There you go. Here's the figures here, and at the top to tell you what they are. So we've got what the forecast is and what the previous month is. So it's not something I really pay attention to. I only pay attention to the fact that it is FOMC day, and I just want to watch my positions. So no problem. Yeah, but Forex Factory calendar, there is a third-party link to it as well on the website, down at the bottom on the left of the homepage. So I use this all the time for the up-and-coming news events. Let's go and take a look then at a few currency pairs. I don't know what to look at, guys, because there is not too much. I was looking at the Aussie Dollar CAD. Now I only have 1,000 candles loaded at it. at a time. Well, look at that, guys. Pete, was it you where we were looking at this being a triangle? Because if it was, it won. I'm trying to remember what we talked about, but we can clearly see here was the area that we were looking at getting involved. This was your target. We saw a weird spike though that would have stopped you out. Again, look at that. You know, I didn't have an entry on this. I would have been looking for a double top. Yeah, I think it was, Pete. Okay, let's go and do the high time frame analysis on this. Anyway, I had to load 5,000 candles on the Aussie Dollar CAD for me to be able to look far enough back to see structure, because we're at something like 10-year lows. Ridiculous, absolutely ridiculous. But this was our most recent low, and just look at the bearish moves we're seeing, guys. And when we start doing things unusual within the Forex market, like making, you know, new 10-year lows, or, you know, the pound new 2-year lows, and uncertainty, trading is very, very difficult. Very, very difficult, because structure gets blown out the way. We start seeing very directional moves. I mean, on the Aussie Dollar CAD, just look, 1, 2, 3, 4, 5, 6, 7, 8 bearish days in a row. And the Aussie Dollar CAD isn't a mover. You look, can you see 8 bearish days in a row? This goes back 1,000 candles, so what's that, 3 years? Okay, you have a bullish run here, and then you do have another bullish run here. So this is probably, you may have one here as well. So you might have 4 times in the past 3 years where we've seen movement like this. So it is not a usual occurrence. You know, it is unusual, and that makes, unfortunately, unusual trading. It's been very difficult for me, guys, and I may as well go ahead and say this now. You know, I set up this website to help other traders and to help my trading as well. I'm just like everyone else. I'm quite an emotional trader. I don't sabotage anymore, but I wanted something that would give me the stability that I wanted in my psychology. And helping other people as well gives me something to focus on more than just the trading. And we started the first month went brilliantly. Me personally, when I started, I think it was a 600 pip month, something like that. I made like 8%. And then, you know, the last 3 weeks, it was, the last 4 weeks, it was a great week for you guys, a break even, that losing week, which should have been a winner. And then this week, and you know, I'm kind of chomping at the bit here, guys, wanting you guys to see some decent trades, some decent winners out there. And like I said yesterday, I was 164 pips up yesterday afternoon. Within an hour, the pound Aussie lost, and then this morning the pound New Zealand, and I'm down minus 35 now. So yeah, I'm wanting you guys to not just learn. I know some of you have been learning very well, and you've given me some great compliments regarding the educational material, but I want you guys to see some pips as well, some decent pips, because there are some very, very profitable strategies. Head and Shoulders, I've said this a few times now, guys. Head and Shoulders is a very, very profitable strategy for me. And in about 6 weeks or so, it's been terrible. The Head and Shoulders. And that's because we're seeing this type of directional movement. Head and Shoulders is a rotation pattern. So as we came into this major structure area, you know, I don't know if the Aussie Dollar CAD did, but these are the areas where we look for the Head and Shoulders. And unfortunately, because of these very directional moves, when it's given us the signal, it's blown straight through. And so Head and Shoulders, I'm a good Head and Shoulders trader. I've got some 2 or 3 key ways to trade them. I think yesterday as well, I posted in on the pound Aussie on the 5 range 2 potential Head and Shoulders, and they almost played out but didn't because of the news. And I mean, I wasn't involved because I was already short the big flag pattern, but it's been difficult in terms of the trading, guys. Not much else to say other than it's been difficult. Khan says exactly. Peter, every day a school day. Very proud of Peter. I am seeing a change in his trading. He's starting to reduce down some of his sabotaging, some of his exiting those trades early, and I know he's absolutely loving the breakout patterns. Stuart, this will come. It's just a shame we're in a drawdown. It absolutely is, and we're only in a drawdown actually because of last week. And I don't know, Stuart, if you watched the weekly statistical video. That was just such a shame of a week because again it was all news related. The pound dollar 7 pips from targets stopped us out for break even, hit 2 days later. 3 other trades stopped us out to the pip, then went on to win, and we would have actually finished 50 pips in profit, but because of the news and the uncertainty, the ATRs and the those weird obscure spikes just stopped us out, and the figures are the figures. We finished down, and there is no denying that. What I don't want to do is make excuses. We finished down, there's no doubt about it, but what was the reasons? And the reasons were, it's clear, the ATR, we saw erratic behaviour which saw us spike up and just tap our stop losses. So is anybody else in a drawdown with me? While I don't want anybody to say yes, it's very lonely being in a drawdown. It's misery loves company, as they say. Aussie Dollar CAD. Exactly, Karen, exactly. Aussie Dollar CAD. So we're pushing lower. How much lower will we go? I don't know. Again, this is only the 3rd or 4th time in 3 years we've seen a run like this. And I'm not too comfortable shorting the market, and I ain't comfortable buying it either. Nothing on the 240. Let's go and look at the 60. The daily education is well worth the occasional drawdown. Yeah. And I was conflicted when I set up this website, because I know that the educational material is good. It's good quality structure-based trading, and it's very profitable. My concern was that with me sending out signals, how is it going to affect me? Because I take it very personally, actually, guys, when we see a loss and other people have taken that trade and see a loss as well. And I've got to make sure that I'm very up on my psychology and mentality. I fully believe that without a strong mental attitude and an understanding of psychology, because we all know by now the market moves on psychology, it moves on people's interpretation of the market and whether they're going to buy or sell it. And I don't want that to affect my trading, and I see a specialist every week to deal with emotions, and I actively talk about this, and I talked about this before we launched the website, how I would feel about if people took my trades and we hit a drawdown. And the only way I could relate to it at the time was how I felt when I was in a drawdown, and it's not a nice feeling, and I don't like being in it. But at the same time, I then thought to myself, well, we're pretty much always in a drawdown, aren't we, guys? Because as soon as you hit new equity highs, the next trade may be a loser, and you're instantly in a drawdown. So we're pretty much always in a drawdown, yeah? Because as soon as we make new highs, we take a loss, we're in a drawdown again, and it's pretty much all the time. And I thought that it would be quite beneficial for people to be in a drawdown with me, and we can be in it collectively, and that gives us support just like the community does within the chat forum. The good thing will be is obviously when we come out of the drawdown and we make new highs. Now, I'm typically not in a drawdown for more than a couple of weeks. The last drawdown I had was 6 weeks ago, something like that, and I was actually in it for 2 or 3 weeks, and then I got myself out of it within 2 or 3 days. We had a lot of breakout patterns, and they just threw me out of it. But yeah, it's not nice knowing that other people are in the drawdown with me. So, but when we come out of it, and we've used proper risk management, and we've limited the bleed. We've been through a few trades, haven't we, over the past couple of weeks, where we've given the reasons why we wouldn't enter, and we've later looked at them in the next webinar and said, yes, we were absolutely right. And that's education in itself. It's not all about taking winning trades. You make money two ways. You make money by taking winning trades, and you make money by not taking losing trades. So two ways to do that. Stuart's not worried. I know how profitable Chris is, so I have full confidence in his trades. Thanks, Stuart. Lovely to hear that. The cost of learning. Yep, true words about always being in a drawdown. Yeah, we're always in a drawdown. Yep, you learn more from losses than profits. That's true. They hurt more. Yeah, calm the wise owl. So Aussie dollar CAD, we had the move lower. We spoke about initially, I remember this now on the Aussie dollar CAD, and I said that this could be a double bottom. I would need to load more data. I didn't have enough loaded, but Pete said that he's also looking at this being a triangle, and I said, well, yes, it could be. You're going to want a conservative entry up here like a double top. And I will just run through this again because we did talk about this, and I said it wouldn't be one for me, not unless we get a double top up here. And this is where we were at. And we looked at the RSI, and the RSI was not overbought and would not provide us a double top on this time frame. But then what happened is we did come up for a retest, and from that point we did see the breakout to the downside. Now, I also spoke about what typically happens, and triangle is, you can look at it as a spring, a compression pattern, however you want to word it. What happens is, after we see a rally, all this bearish pressure, we see the market start to coil, and it's that coiling effect that is a build-up before we get the big breakout. And look at the big bearish candle here. And I did say that it's very likely we would come up for another test, for a third test up here, because we would probably need to see more coiling, more pressure build up before we see the breakout. Now, that didn't happen. I was wrong in that analysis. I tell you that the majority of the time I am right with it though. But look what happened. The pressure built up, and boom, look at the big bearish pressure that happened, and it did go down to hit targets. Now, if we go to the 15, I'm remembering more and more what we spoke about now. It's good having the webinar every day. If you remember, guys, in the lower time frame, we spoke about there was this 5-minute breakout pattern here, which rallied up, pulled back, did give you an entry down here, but I was actually out in the afternoon. Then it rallied up to hit targets. So congratulations if you got in it. As I say, it did come down for the retest, and you did get targets if you managed to get an entry. But there's no double top up here either. Nothing that would be valid for me. And you would have needed, if you was using this double top here, which again you didn't have the RSI confirmation for, your stop would have needed to have gone an ATR above the high. What was it at the time? The ATR was 10, so you would have needed to have gone to 70, and your stop would have been here. Okay, so you may or may not have been stopped out if you got involved with this retest. Wasn't one for me, just didn't form the way that I like. But as a result of all the bearish pressure, we obviously did get the breakout and targets. Did anybody take this? Just give me a yes if you did. If we had the RSI confirmation, that would have given more confirmation here, but yeah, the big spike came 1 pip away, and with all the uncertainty in the market, would the spread have increased and would it have stopped you out? It could have done. It could have done. Yeah, Chris, won't you think it wasn't a triangle, rather a small channel? It could have been. Yeah, this actually would have been invalid for me. I would have needed to have seen this. I would have needed to have seen a third touch, and I did say in the last webinar that waiting for a third touch here and a third touch here as well, because that was 1, 2, 3, would have given you more confirmation. But these triangles are only valid when we do not come up to retest the closes of the candles, and right here we did. So yes, you could actually then look at this as a low and tight flag with that one test up there. So yes, Khan, you could have also looked at this then as a low and tight flag. Again, not one for me. The reason being is look at the size of the channel in comparison to the pole. I would have needed the pole a bit longer. So, you know, there are patterns out there that are going on to win. There are trade setups that are going out to win. Again, just wasn't quite right for me. So, channel break. Yeah. Parallels, yeah, it's exactly the same. You can look at it a low and tight flag, or just a channel, however you want to work it. There was no entry though. My point is, up here there was no entry. You had a single spike up here. There was no double top, there was no Rsi confirmation, there was no 3-bar reversal, there was just nothing, unfortunately, to provide an entry. I don't use the word parallels, but parallel is just two lines that are parallel to each other. So I suppose it's just the same thing. Channel, parallel, whatever you want to call it, it doesn't matter, as long as you know how it forms, why it forms, and the direction. Let's go and take a look at... We'll take a look at the euro yen. Did anybody take the euro yen 55 pip winner yesterday? It happened within probably an hour. It was a lovely trade, and I'll run through that. And I do have, under trend continuation in the educational material, something called trend continuation, the extra edge. And this is one of those trades where we add multiple strategies, multiple confluence together, and then we look at a trend continuation trade, and typically we look at it on the lower time frame, usually the 5 range, or usually the 5 or even the 15 minute, but we're more aggressive with it. So I will run through that now. And this was the big flag pattern we spoke about. We've been talking about this for a few weeks and never offered an opportunity to get involved. But I do say there are multiple ways to get involved with the trade. We have the first chance, which would have been up here. We have the chance to get involved in the journey to its destination, and then you have a chance to buy it up if you come into the next structure level. Well, structure here was the 127. This is where we would have taken targets. So I say many times that some people only get involved at the very highs, but I'm a trader, particularly with breakout patterns, that will get involved within the journey to its destination. And we looked everywhere here, guys, didn't we? We looked here at getting involved, here as we were getting the breakout, here as we'd got the breakout of the pole. We were looking for the pullback into this trend line just here. We never got it. Then we broke to the downside again, and then this right here. We had violated, or we were just violating that level. And you know, there was, well, 80 here, but there was 55 pips up for grabs at the time. So as we dropped down to the 240, we'd had a 240, I think it was 240 confirmation. We violated this level. We'd gone down to the 60, and I think I'm just going to have to go down to the 15. Yeah, this was it up here. Okay, this was the area I was looking at, and I am going to drop to the 5. So we know, bigger picture, we were breaking bearishly towards that big daily pattern, and here on the 5 you can see that we were just moving very directionally. And this is the beauty of adding multiple strategies together. you guys have traded these breakout patterns for a couple of months with me now, and I think there was only one of those patterns that failed to hit the 127 fib, and that was last week, was it? Or earlier this week? Last week it was. So they have a very, very high probability of hitting the 127. So that means that we can be more aggressive on the lower time frames. It also means, because it is a breakout pattern, that when we start to see this directional movement, that we can be a little bit more aggressive. And this actually wasn't that aggressive, because trend continuation, those of you that do trend continuation with me, you know that I always say that the middle of these breakout patterns, what do they offer, guys? We see this time and time again, or at least I repeat it time and time again. The middle of these breakout patterns offer excellent places to get involved with the trade. We had confirmation we'd broken out, we looked for a pullback, and we simply used a lower low, lower close as the entry. Right here was the lower low, lower close. We'd had 15 pips of risk, and our target was down at that 127. And a lot of my trading, guys, is like this. You know, I know you guys haven't seen too much of it lately, but a lot of my trading is like this, because we are able to add multiple strategies together. I know that when we see the breakout of a breakout pattern, and we will just talk about our daily pattern, I know that when we break out of the channel, the probability of us coming to retest the lows has really dramatically increased. Secondly, if we break the pole, we have a very, very high probability of coming down to that 127 fib. Okay, and because I know how breakout patterns work, and I know how they can move very directionally, I know I can be aggressive. And I also know on the lower time frames how to trade simple structure, a breaker structure, a pullback. This was a breakout pattern, gives me higher probability we're going to break to the downside, and boom, we just almost pain free. We saw a little bit of a reaction here where it looked as though we were going to put in another breakout pattern. In fact, I think we just went straight down and hit targets from the look of it. Yeah, we did. And then look at what we did again, guys. We put in another breakout pattern right here. Now, I don't think this was valid, but let's take a look. A directional move, and we have it on the closes of the candles. Does anybody know the name of this pattern, if it's valid? It's one of my favorite patterns. It has a very high win rate. 1, 2, 3, 4 would have been your entry just here. Look at what happened though. Look at this spike. I only go an ATR back. An ATR would have been here. Would have stopped you out. And this is typical, I would say, just of the fundamentals that are going around. We're just seeing spikes that occur that are bigger than what the ATR is. Now, I wasn't involved in this, but if I was, it would have been another trade that would have just stopped me out. And again, fundamentals, we're seeing those obscure, even on the lower time frame. Look, big bullish candle here. There isn't another one, not a bullish one like this within the chart, is there? So it's unusual, and it's probably as a result of some news. But what we then did is we broke to the downside. We saw a pullback. We saw the pullback to the middle of the channel, and your targets, or at least mine anyway, would be a 127 extension. And as you can see, it did go down to hit targets. Anybody spot this or get involved? 44 pips. You may not have been involved. I wasn't. This occurred at around 9:15 at night. So I wouldn't take a 5-minute trade just 45 minutes before the 2200 hours changeover, because that's when we start to see, you know, the fees increase and a little bit of erratic behavior. But there's absolutely no reason why you couldn't have waited for the breakout as we got it here, waited for the pullback, simply wait for a lower low, lower close in this area. That would have been this candle right here. Stops an ATR above the high. Retest of the 127. It would have given you just over a 1-to-1 reward to risk, and it went on to win. Let's just catch up with the chat. Had to change my mouse this morning for the past 2 weeks. The laser on it has been going and I've not been able to use it. I've got two mouses, and it went on me this morning, so I had to change it over. The thing is, my PC has around 9 USB points and all of them are being used, and it took me about 30 minutes to figure out which one to pull out for the old mouse. And I've got everything fixed underneath my table, so yeah, bit of a nightmare this morning. Lovely trade on the euro yen it was, and again, you know, I see a lot of my trades are like this. If I miss the breakout pattern, we usually end up getting involved at some point. So it's not very often that we see a trade that just rallies on to hit targets without me being involved. Khan, sorry, but at this time Trump also commented on new tariffs on China, so that was one reason too. Oh, there you go. I know all technical guys will hate me for this. Khan, you're also a fundamental trader. I know that. I'm not. It wouldn't be something that. Structure, I know how to read it. Give me any chart, I'll know how to read it. And the majority of the time when I make a prediction, I'm usually right. I will say I'm right 7 or 8 times out of every 10 as to whether we're going to go bullishly or bearishly. And that means generally when I get confirmation and an entry, you know, I have maybe a 55% win rate, something like that. But because we had multiple strategies together, I usually end up with good reward to risks. That hasn't happened lately, hasn't happened. Low and tight flag, Stuart says, yep, absolutely. But again, you know, even using an ATR or a 10 pip stop loss. Sorry guys, I don't know if you can hear that helicopter flying overhead. They do tours over the island. Yeah, you would have just been stopped out on this. I only entered Aussie Dollar Swiss. I know you had a 30 pip winner, Pete, so congratulations. Sarah, can we look at the Euro Swiss? I am in the Euro Swiss since yesterday. Yep, we can look at the Euro Swissy. I'll make a note of that. We'll take a look at it after the Euro Yen. Let's just see what's happened on the Euro Yen. And just something else that I say, guys, is that when we start to see low and tight flags, it's an indication that we're moving very directionally, and we could see a continuation. That's what typically happens. Whether or not we will see another continuation lower, I'm not too sure. But this has gone very ugly now, guys. Have you see this? Very ugly. So if I zoom out, do you see the big difference in what the market has done? Directional, pullback, directional, pullback, directional, pullback, directional. And now we've got 3 or 4 tests around the same area. So indication that we could be running out of steam here, and we may not want to look at shorting the market anymore. I'll move that out of the way, and we will take a look at the Euro Swissy. Euro Swissy. Just while I've got it up here, the Euro CAD, we spoke about how this may have been a triangle, but it wouldn't be one for me. We would have had to have waited for this to be a double bottom, and once again we were right with our prediction. We didn't make any new highs up here. There was no confirmation we were going to go higher, and the market just simply broke to the downside. So if you remember that, guys, there was nothing on that. We will take a look at the Euro Swissy though. What is it you guys are looking at in particular? Do you have a potential setup? Or are you looking at the potential break, Sarah, right here? are looking at the potential break to the downside. So bearish here, move lower, a pullback, a move lower, a pullback, a move lower, a pullback. Where did we pull back to? We pulled back into the wicks. So up here, this may have offered you an opportunity to get short on a first chance entry. Khan's looking at 110. You're looking at, is that 110 or 111? It's 111. Okay, so you're looking at, is that right? You were looking at this area 111? No, I cannot read. You're looking at 110. Down here, 110. Okay, so we haven't got any confirmation as yet that we've got a break below, close below this structure level, though price is breaking lower. However, it is important that we understand that just because we're breaking lower here on the dailies doesn't mean that we're going to close lower. Look at what happened on the pound Aussie yesterday when it looked like on the 240 we were breaking out the channel, and then the news came out and we rallied back the other way and put in a big bullish candle and technically held structure. So it's important that we wait for confirmation, but in saying that, if you believe price can break to the downside, we could see a move down to this structure level just here. 1, 2, 3 tests at this level. If we go to the 240, here on the 240 guys, what do you see up here? Let me know what this is with the RSI confirmation. Why didn't you guys tell me about this yesterday? I would have taken this trade. Sarah, you're going to have to be awake during the day. This was at 10 in the morning. You could have a 92 pip move lower. So this was a first chance entry, guys, wasn't it? So let's just go back to the dailies. There are 3 ways, as per the educational material, we can get involved. The first chance, which is within the wicks, where we're allowed to drop 1 time frame lower and look for a rotation pattern. And that means that we get a test. 1 test here, another test here. I would have waited for the close of the candles. Or extra confirmation, you can wait for a rejection candle. You got a lower, lower, lower close. You had the RSI confirmation with divergence. Targets were a retest of the lows. If you'd use this as the entry, stops would have gone, you would have got a brilliant reward to risk here. Stops would have been an ATR above that level, 20 pips giving you 83. Okay, this would have been your risk. Your reward was this, guys. Beautiful trend continuation trade using the first chance entry. 24 pips for 91. Okay, Khan, gone slow yesterday. Today it's playing well. Well, what I will say, Khan, is look, very directional movement, and you've had a confirmed break below this structure level. I would have personally taken half of a position or all my position at this level if you're still in it. You could see a move all the way down to that next structure level at 108.50s. You could. I always personally like to take half my position off at a retest and see if we get the continuation. But yeah, this is another lovely trend continuation trade using the first chance entry. We had one, if you remember, last week on the pound New Zealand. Exactly the same setup, except that was a triple retest. That one though, we had the big bullish AB equals CD pattern and the cipher pattern and a potential rotation we had on that one. But yeah, look, if you got this, then well done. If not, then you've now had on the 240 a confirmed break below, close below. You could look then for another pullback exactly the same thing. Look for your first chance entry. So I drop down to the 60 here and look for a chance to get involved with a double top. Did anybody take the short on the Euro Swissy? Again, guys, what I mentioned this in the last webinar. What I've had to do the last few weeks is I've not been able to spend as much time by the charts. You guys know I suffer a lot with my neck and back. I did too much work when I was younger at the computer for one of my first companies, and all the work I've been putting into the website and the charts and the Excel spreadsheet, I've really been playing up. So I've been trying to spend as much time away from the charts as possible, and so this would have been something where if I'd been more attentive to the charts, I would have picked up on this, and this would have been an opportunity. So missed, unfortunately. Not really the theme of the last couple of weeks. The theme of the last couple of weeks has just been lose. But it's good to see that the rules, it's good to see the opportunities play out that meet the rules. That was a classic example. We're very oversold on the 240 at the bottom trend line of the daily falling channel. Daily falling channel. Ah, no, this is not a falling channel. No, this is just trend. If you're looking at this being a channel, I would not look at this as being a channel. 1, 2, oops, 2, 3, 4, 5. You never came up here for another test. I wouldn't look at this being a channel. You would, first of all, the pole would typically be longer. This is just trend continuation. Yeah, it wouldn't be a channel for me. You would also need, on the first test, to be oversold just here, and you'd need bullish divergence, and you don't have that. This is just trend, Sarah. Yeah, I see what you're looking at. It wouldn't be a falling channel for me. It would just be trend continuation. So I would expect price to continue lower down to this level. 184.50 is just in front of the 184.50s number, maybe 185.55. You want to make sure that you get your fill on it. You can also look at a few other things as well for your potential targets. You could look at an AB equals CD pattern. Where does that bring you? Brings you close to that area. You can also throw in some fibs. You can look at an extension from your swing low to swing high, and you can see you've got a 1618 just a little bit past your structure level. And if you look for an inversion, I don't think you'll have an inversion here. Nope. Are there any other fibs? The RSI here on the daily is not oversold. No, there's no other fibs. Let's just look at the 240. Okay, 240, you're massively oversold here from the look of it. Let's go ahead and load some data. Refresh the screen. Okay, you're oversold at 9.85. Now the RSI can be oversold all the way down until you reach structure. So for me personally, the RSI doesn't have any influence unless we're at structure. However, the more oversold we are, the more likely we're going to see a reaction even at minor structure. So if there is minor structure looking left, and we will take a look, so I'm going to put a structure level on at where price is trading currently, and we will look left to see if there's any minor structure. Well, for the 1000 days of data I've got loaded, there's nothing here. You've got that. That wouldn't be enough for me to say we're going to bounce off that zone. So yeah, you could see a continuation here. At the same time, you may see a pullback into previous structure, maybe up to the zone, and then you may see a continuation as well. That's why I like playing for two targets. So target ones would have been a retest here, and then up here you would have moved to break even, and you've got all this room for price to come up to before it stops you out. So hopefully it'll turn before then and you'll see a continuation. But yeah, even though you're massively oversold there, that RSI can go all the way down to 1. And you can just continue to see that big bearish move. Are you looking at getting short, Sarah? Is that what it is? But yeah, yep, a 92 pip winner there. Here's the thing, I said this earlier this week. It only takes one or two of these trades, and we've just seen one here, haven't we, guys? You know, this was a 92 pip winning trade. The pound Aussie obviously stopped us out, but that would have been something like a 280 pip winning trade. It only takes one of those trades or two of those trades to come off, and you're instantly out your drawdown and into a winner. The pound dollar last week, you know, it went on to hit after stopping us out, after we got 7 pips close to our targets. It's you know, just one or two of those trades, that's all it is, and we just have to wait until those opportunities turn up, and we see a couple of them in a row that win, and we're out of our drawdown into profit, and hopefully then all this instability is past and we start to see some normal movement within the markets. Wow, is it really 11 already? We've hardly looked at any charts, have we, guys? I've just been rabbiting all this time. I will take a look then at something else. What am I going to look at? We'll take a look at the euro dollar. We did make a new low on the euro dollar, but I still don't think there's anything for me to get too excited about. You guys have anything on the euro dollar? I haven't taken a trade in this in weeks. So if we put a structure level on, okay, if we put a structure level on just here, we had this double test, but then we had this wick, so it actually means that that's the new structure low just there. And what we saw is a big bearish candle, and we physically made a new low on the dailies. So if you want to look for shorting opportunities, you had a lower low, lower close candle. If you look left, I do need to load more data, but it looks as though there could be a structure level just here. So I'd be a little bit cautious about looking for a trend continuation trade. Just going to take a look at the 240. Okay, first chance entry would be the wicks. You can see that we've come up into that zone now. You could drop one time frame lower to the 60. Here on the 60, you had no RSI confirmation, so you had a move higher. You had this little retest here, which you violated to the upside, and now you're just up within the wicks. Let's take a look at the 15, and nothing here on the 15. You can just see the spike, the erratic behavior here, big bullish candle and then a pullback. If you were working the lower time frames and wanted to get long, well, because of this retest just here, you could again just highlight the wicks and just look to see if there's any reason to get involved here. Drop down to the 5 and see if there's something like a little double bottom. You would first of all need the RSI confirmation, and even though this looks like a retest down here, there is no RSI confirmation. So nothing, absolutely nothing. Even if you wanted to get long, the double bottom isn't valid. Yeah, trend it is, Khan, on the Euro Swissy. Yeah, it's a trend for me, that. So 0 on the euro dollar, guys. Move that one out the way. Is anybody doing much over the weekend? I've got family over, and it's my wife's sister and her son. So I've got, what she booked us on? She's booked us at Siam on Sunday, which is the water park, and on Saturday we've got a 3-hour boat trip. And I posted in a picture yesterday. I went out for a walk, posted in a picture of our local beach, and it's absolutely heaving, and it's about 32 degrees here at the moment. So you're going on a boat trip tomorrow. I'll be diving in off the boat. I'll be the first in. I do like to dive off the boat, show off my diving skills, and then the kids will follow me shortly after. They always like me to go in first, make sure there's no sharks. Haven't told them there are sharks. There's plenty of hammerhead sharks around here. Working at weekend, Pete says. Yeah, working at your job or backtesting? Sounds like you'd be working at your job. I will be composing myself over the weekend as well. I'll be getting rid of the negative thoughts and the negative vibes I've got from the market over the past few weeks, so that I come back with a clean slate, ready to attack the markets. Stuart says he's going to a friend's wedding tonight, and then I've got an airport run at 1 a.m. You know, I can barely stay awake past 10. Do you know that? I think I must need my beauty sleep. That's what it must be. Sarah turning off all her devices so she can unplug. I do that. Do you know, at the weekend, I need my phone. I've got a dual SIM phone, and I use it for, I've got properties in England and I need it for that. And but at the weekend, I leave my phone at home. Come Friday night, we go out for a curry, so I don't have a phone. Saturday, I don't have a phone. Sunday, the kids, they're not allowed their phones when we go out of the house, so that we just spend some good quality family time together. I'm very proud I can say that, because when I went to see my counsellor regarding my stress levels due to trading and how I wanted to resolve them, I said I also wanted the ability to switch off from the charts and spend time with the family and with the kids. This is how much trading affected me. And I said to her, I started seeing her now about 11 months ago, and I said to her that my emotions are a lot better. I stopped sabotaging. I said, but I still find myself that when my son comes in to talk to me and show me a magic trick that he's just learned, or something on Fortnite that you know, a new dance move or something like that, I would always say, just give me a minute. I'm right in the middle of something really important. And I'd be looking at a chart, or I'd be working on the backtesting spreadsheet, or I'd be talking to somebody, or there'd be a problem with one of the houses, and there'd always be something that would take precedent. And I said to her, I said, you know, I feel like a bad father. My emotions in trading have taken over to the point where they're more important than my son. And I said, I feel like I'm a bad father, and I want to change that. And I said, it isn't just that. I said, it's just in general, I want to be able to understand my emotions so I can become a better trader as well as a better husband and a better father. And now the difference in my personality is that when my son comes in, no matter what I'm doing, no matter if I'm in the middle of talking to somebody, if I'm right in the middle of, you know, writing out a 3-page essay, I stop and I physically I take my glasses off, I turn to the side, and all my attention is focused on him. And we spoke about the importance of quality family time and unplugging as well, and talked about Sarah and how she's struggling with her sleep, and how you need to understand the difference between work and home life, and that runs into psychology. And it's very, very important that we have that difference, because if we're too involved with our trading, then we're too emotionally invested. And if we're too emotionally invested, we're going to not think logically, and we're going to start forming biases in the market, which are not really based on structure or anything. It's just our feeling. And that's what we don't want. And these are just signs to me that over the past year or so, there's been a very big change in the way that I perceive psychology, the way I perceive the market and my family around me. And it's been a benefit to me seeing this woman who helps me with the psychology. There's been a benefit in trading as well. I'd be a year ago, even 2 years ago, I would be pulling my hair out left, right and centre, banging the desk sometimes. I can't bloody believe that, that stopped me out again. What the heck is going on? Now it's a case of, I understand it more. And because I understand it more and how I have those reactions, those negative feelings and thoughts which do not help my trading in any way, then I understand them and I'm able to manage them and deal with them better. So, another little rant there. Peter, job in supermarket. Can't. I know that's bad on top afterwards. Mrs. will shout at you as well. Poor us, lol. Yeah. I have to remember that I'm trading so I can live, not living to trade. And it's so easy for me to preach that, but it's so difficult for other people to understand. I've been seeing my psychologist for about 11 months now, but I knew that my problem a year before that was psychology anyway, and I knew that if I got that under control, my trading would improve, and it did. But I wanted to see her to really fully understand. And you look at some of the best traders in the world that are out there; they all have coaches that help them with psychology, and even just having your partner, your husband, your wife, girlfriend, boyfriend, whatever it may be, someone to talk through. And that's why the chat works. Now, it's not a solution, but it's a way of sharing the burden of talking through the trade, holding it together. But yeah, we trade to live, we trade to make money. Obviously there's always that urge to make more money and to trade more. And that urge can very often get us into trouble, because it can very often then lead us to taking a trade that we shouldn't, and that's what we don't want to do. It's very rare I take a trade that we shouldn't, but if I do, I will openly admit it. We took one maybe 6 weeks ago. Marcus isn't in the room, he's off on holiday, isn't he? But me and Marcus took it, and later on realised we took a breakout pattern at a psychological number, and the first thing I did was a YouTube video on it, and I sent it out to everybody. And I had something like 150 people view it. I had about 30 people respond saying, wow, that's great. The fact that you was able to instantly, openly admit that you'd broken your rules and the trade had gone on to lose. And when you have that ability to openly say, I just shouldn't have taken it, and these were the reasons why, that's all part of your learning curve. It's your understanding of psychology and why you did it, and hopefully why you won't do it next time. It's only possible if you trade trends and don't take too many trades. Just take a couple and ride it all the way. Remember that well, Stewie. Yeah, Stuart remembers it. Scalping is quite intense. So many decisions in very less time. Yeah, I don't scalp, but I do drop down to the 5 range, and I can be more aggressive with the entry. I love 5 range trading. In fact, here's something else that usually I have probably 25%, maybe 20% of my trades are on the 5 range. I've hardly had any. And again, just taking a broader look at the market. So we've got, first of all, unusual movement, new lows within the market that we're seeing in a lot of currency pairs. I've seen now for about 6 weeks, hardly had a head and shoulders that's gone on to win. That's very unusual. I'm seeing a drawdown, or I'm seeing trades that 3, 4, 5 trades that just stop me out to the pip, then go on to win. That's unusual. Now, it's not uncommon for me to be stopped out occasionally by a pip, but not 3 or 4 trades within a week. That's unusual. So not taking as many 5 range trades for the past few weeks, that's unusual. So when we take a bigger look at, are we trading in a consistent way? Yes, we are. But what are the factors then as to why we're not performing like we usually do? And they're all the factors, and that can be seen with the 5 range and the head and shoulders and things like that. So that understanding as well gives me confidence that it's not anything I'm doing wrong, and that's quite important for me, for my psychology, to understand that when I go and review the trades every week, which I do on a Friday, and I look at them and say, was it a good trade, did it meet the rules, it gives me confidence that what I'm doing is right, and it's unusual times. And again, what we don't want to do is to make this drawdown any worse. Again, we were almost out of it yesterday afternoon, and we're right back down, probably 30 pips back further down into the hole, which isn't too bad for a week. as long as we try to limit the drawdown, and we will just wait for those trades to come, and it'll just happen. I've had it literally within a day where I've had a week, even a day. I'm sure I had a day where I earned like 250 pips in one day. Just everything just hit, and we just have to wait for that. Happens twice this week with me, and it's horrible, isn't it? Last week was horrible. It was just horrible. We should have finished 50 pips up last week. Nothing we can do about it. We didn't. Some of you actually didn't finish as bad as I did. Most of you, it's only me and Pete that didn't get the pound Aussie trade. For some reason, it just didn't take. Everyone else hit 50 pips, so you guys, your drawdown wasn't as bad. Sorry, Pete, I guess the market's changed slightly over time and adjustments need to be made. Well, yes, the markets will change over time. Structure, though, is always going to be structure, okay? So if you look at this here on the pound dollar, this is 3 years worth of data. Structure either gets held or it doesn't. Now, unless there's an absolutely fundamental change with the way that they work price out, we will always be able to use structure. What may change are things like back patterns, because they are not structure based, these are Fibonacci based. And maybe as less people say, well, these patterns are not profitable, and there's less people selling them at the decompletion just here, maybe these patterns become less profitable because people are using fibs and people stop using them. So that's a potential. But all my strategies, they're all structure based, even flag patterns, directional pole. Yeah, this right here, this is structure. All mine are structure based. Now I may use a fib to keep me out of lower probability trades, so I need a minimum of a 382 to be hit. That's just adding to just giving me a validation reason. Basically, it just validates the pattern for me, because I know typically most of them hit a 382, so I'll wait for that to be hit. So for my trading, it should really never change, not in the foreseeable future anyway. Those pound trade give me nightmares. Yeah, horrible. You watch pound New Zealand rally down during FOMC and hit. Nah, it won't. We don't see that big movement anymore, but it could. Keeping my stops quite differently from usual traffic. That's a possibility, you know, during this uncertain time. Maybe you want to give it 1.5 ATRs to allow for all those trades that just stop you out. That's certainly, you know, you can be dynamic with your stops. Typically I only have a 1 ATR because that works best for me. Sometimes, like low and tight flags, I may just use 5 or 10 pip stop loss. But yeah, in these times where we had one on the euro yen, didn't we guys, the 5 minute, which was the low and tight flag, which would have just stopped me out, but in using a 1.5 ATR it wouldn't. And last week as well, you know, slightly bigger ATR, we wouldn't be in a drawdown now. You know, would be at break even. So maybe that's something to do. Maybe you want to use an ATR plus 5 pips. That would have made all the difference last week. You know, again, we would have finished profitable. Hindsight is great, so maybe, yeah, that's a potential. It's a good idea. Increase your stop loss a little bit during these uncertain times. Pound dollar. I just don't know how much further price can come here. We could come down to this level. Again, just like a lot of these currency pairs, I'm going to have to go and load more data now. And we've just been very, very bearish here. RSI has just gone oversold at 18. And as we go down to the 240, well, we had the move lower, the pullback, another move lower, but we didn't make a lovely extended move lower. Instead, we've only just made a new low and we're consolidating sideways. So Here on the 240 wouldn't be any type of trend continuation for me. As we go to the 60, there was something I was looking at, but I don't think it's going to be valid. I was looking at a triangle, but it's going to be very, very ugly. But you do have 1, 2, 3. That was your fourth test. Again, triangles, flags, particularly low and high type flags, they occur in directional moves and in trends, and you could see a continuation here. Now if we get a double top, it may be a different story, and we didn't. It was almost a retest, but it did not come up to retest, but you did have the RSI confirmation. A double top up here would have given you the confirmation that structure level had held. It would have given you a small amount of risk and a big old reward. Let me zoom out a little. And I've said this a few times now, you know, these are the type of trades that I do come across. I'm surprised, you know, there is not more of this, of people giving this type of education out there. Do you know, I'm so surprised. Before I set this company up and this website up, I went and I did a bit of snooping around at other companies, and I was actually gobsmacked, to be honest, guys, at some of the garbage that was being taught out there. The reasons why some people were getting involved in long or short trades. Now, I only know that my trading is profitable, and I can look at other people's structure-based trading and compare it to mine. There's no real right way or wrong way to trade. You know, you trade on a strategy that's going to be profitable for you. But if there's companies out there that are providing educational content, and I'm sat here scratching my head thinking, why on earth have you bought that? There was a company, and I watched it live, where I think they bought a Head and Shoulders, and I've got very strict rules for Head and Shoulders, and I was just gobsmacked. I even spoke to my wife about it. That's how angry I was. I was like, I can't believe the rubbish that company is teaching people out there. You know, it's not. There's no way in a million years that's a Head and Shoulders. Head and Shoulders is a pattern. We talk about patterns having directional swings in the market, directional poles. That is the definition of a pattern. It was just garbage. It was barely a trend rotation, and there was just things like that I looked at. But strategies like this, you know, where we have a 3, 4, 5 to 1 reward to risk. You know, I've just shown you the Euro Swissy, the double top, which had a 4 to 1 reward to risk and went on to win. And you know, there are not many companies out there that show you quality structure-based trading. Now that doesn't mean that the companies that I looked at were right or wrong, but I sat there and said, I can just do a better job. I can. And here's the thing, guys, I didn't want to be part. I didn't want to do YouTube lives. I didn't want to do them. It was a lot of work at a time when I want to really spend less time at the charts. But two things: one, it would help my psychology, it would help my trading, and two, it would give me something to focus on more than just trading. So helping other people it is something to do. It gives you some satisfaction. It feels like you're doing something worthwhile, because trading, just hitting that buy or that sell button, doesn't really do it for me. It creates the wrong type of emotions for me. It doesn't create happiness. It creates a lot of sadness, even if it wins. So bullish divergence 2. Let me just catch up with the chat. Stuart says, I've learnt if you can use a 2 ATR based on the risk reward can be better, but not always the case. It can be. The bulk of my trading, when I did all my back testing, particularly structure based trading, you'll find that an ATR is usually good enough. I do have a rule though that if it's under 20 pips, I usually give it an extra 2 pips. That allows for the spread. And if it's quite a small trade, I may give it 1.5 to 2 ATRs as well. So they're the kind of rules that I use. you've just got a lower close. In fact, you had that before, guys. If this trade's valid for you, you've just had a lower close. But again, we didn't get the double top. But there's absolutely no reason why you can't use 2 ATRs for... There are a couple of things. When I have a complex pullback, I use 2 ATRs on that. I need certain fib ratios to line up in order to do that. And I also, the pound yen trade that won for the 128 pips, I use like a 1.5 or even 2 ATRs. But it depends what the ATR is at the time. What I usually do as well is use 113.5. So between the fib ratios 113 and 127, I take the dead middle, and that just keeps me out of a lot of those trades that can just stop you out. In fact, I showed you an example of that, didn't I, in the dollar CAD, where if you just used 113 or an ATR, it would have stopped you out. It was this one we looked at earlier for trend continuation. It just tapped to the 113. And I spoke about how I always have at least 113.5. Let's take a look at the 5 range on the pound dollar. See if it put in anything like a head and shoulders on the 5 range. Zala, what about try the dollar? The pound dollar, the one we're looking at now. And these vultures prey on new traders. I think so. That's some of the companies I was looking at, and some of the educational material was just questionable. Honesty and priceless for me. I love being part of the community. Great. So here on the 5 range, okay, you've got a retest up here which did hold structure. You did not have the Rsi Conformation. The pound dollar on the 5 range, you still need to, well, it's a pound pair, so you can be overbought at 70. We were overbought at 68, and there was no divergence, guys, so still no opportunity there. However, if you are aggressive and that was valid for you, you can look for the pullback, because we've clearly broken below the V point. You can look for a 26.18. It's just not quite good enough for me. Not quite good enough. Our time will come. Our time will come. But just based on the setup, those of you that have done the educational material, you know I talk about ways to spot these patterns early and how we can actually sometimes get involved with the channel. So an indication that we're going to start channeling is we start to form breakout rotation patterns within the channel. So right here was a confirmed double bottom. Right here was a head and shoulders. You may not be able to quite see that, but this was a head and shoulders. We also start to form advanced patterns within them. Don't know if that was quite valid, that one. If we go to the 5, there may be a Gartley pattern that you could have used as the entry. Yep, so X to A to B, B to C, CD completion. And here on the 5, you've had another double top. So you had that double top, but you've had this double top here as well. So rotation patterns. So if you can catch one of these forming, there are multiple ways that you can get involved with the trade. But yes, this could now be a breakout to the downside. You do have, as I say, that smaller 5-minute double top. Unfortunately, again, no confirmation, but you can see the double top has been confirmed, or the triple test has been confirmed, because we've had the break to the downside. So yeah, if you were waiting for a 26.18 here, guys, just be careful. We've got the FOMC out in 2 hours, and lower time frame, we tend to see spikes. okay, it could stop you out. So not going to be one for me. But if you can get involved within these channels, within these breakout patterns on the bigger time frame, you can earn several hundred pips just playing from one side to the other, and you've only got to catch one of them, and and then you sell it for the breakout, and it becomes 300 pips within 3 or 4 days that you can earn. It's always nice when that happens. Difficult to do because you got to know how to spot them, but yeah, look out for rotation patterns, guys. When we start seeing double bottoms form at the middle of nowhere and you've got a directional run, and this isn't really a directional run, but it's an indication that, hang on, we could start to see rotation here, we could start to see this consolidation. Okay guys, well we've been rabbiting now for an hour and 35. We've lost a few people. Watch your positions on the FOMC. There's no trades for me. That was a potential, but with the FOMC, not something I'm going to take. Have a great weekend, everybody. I will see you on the next webinar.